7 tax saving strategies for construction owners to pay less in taxes. In this presentation, I'm going to share with you 7 tax strategies that you can use today to save money on taxes. This is basically a 7 common tax strategies that we use for our construction business owners, and we are able to lower their tax liability. In this presentation, I will share the same tax strategies that you can apply today and lower your tax liability today. And my goal during this presentation is to walk you through all the strategies to save at least ten to $90,000 in taxes this year. And this works even you're already working with a CPA, a bookkeeper, and how you can start doing everything today. And who is this for? If you're a business owner who pays more than $30,000 in taxes every year, you're frustrated with having to give strategies to your current tax professional or a CPA, you want to build wealth. You are tired of overpaying taxes. What makes this different? So, what makes this different is we believe that this is your right not to overpay taxes. We know that most CPAs, they're not tax strategies, they are just tax accountants. Basically, mostly what they do, they prepare your past taxes, but tax advisors, they're the ones that make you that they're the ones that you're looking for, and those are the ones that plan and they plan for your future. Who I am. My name is Maya Slivkov. I'm an advanced tax strategy specialist. I'm a certified QuickBooks Pro advisor. I've been in this industry in business for over 10 years. My main industry that I've worked with are construction, and I'm experienced financial consultant for small business owners. So basically, I've worked with a lot of different business owners, but majority, I'm a tax strategist for construction companies and real estate developers. Um, Basically, there are some tax factors that cause overpayment on taxes, and those are improper entity structure, missed retirement strategies, and missed deductions. So basically, um, so those are like one of the key factors that people miss, which causes you to overpay in taxes. Similar, and I'm sure you know some of you that are listening have some of those right now. For example, there's a lot of business owners that operate under Schedule C as sole prop, and under that entity, you pay the most in taxes, even though it sometimes makes sense to be an LLC if you are small. But once you get bigger, it's definitely beneficial for you to become an S corp, and the significant savings is big. Um, Also, there's a lot of people that don't do retirement, and retirement is a huge one that really helps you first save for the retirement, but also helps you to lower the taxes. And there's a lot of business owners that miss deductions. They have expenses in the business that qualify to be a write-off, to qualify to help their business grow, to they even have those expenses, but for whatever reason they believe they are not they're not able to claim it as a business expense. So what they do, they leave it out, and once you leave the deduction, basically it's like you are giving the IRS free money. And another one is missed real estate investments. And then let's talk about a little bit more in depth what each means. Basically, the first one is improper entity structure. Basically, what this refers to is correct entity structure, meaning, for example, not being an S corp or C corp. Um, so basically, that's not having optimal tax filing election or mismanagement of LLC formation, meaning referring to having real estate title to themselves as a management company or real estate holding company. So this one is really talking about if you're a real estate developer or if you have real estate. Um, there's one of the biggest thing is if you manage real estate, you can become a real estate professional, have a huge tax benefit, and there's certain rules you have to follow with this. And a lot of business owners or professionals don't know the rules, so this is why it's so important and to understand why it's important to work with somebody, especially a tax strategist. At times, business owners they hear much information on the internet, and they're like, "You can do this, you can do this, do that to save money in taxes." We hear all that information just left and right, and the way I see it, yes, it's good to educate yourself. It's good to know, but at times, not fact checking something will cause you more headaches. If you heard something but you did not fact check it and you thought it was right and you did it, you are facing a tax evasion, or potentially, once if the IRS audits you and they question something, where you're going to tell them, oh, I heard it on TikTok or YouTube. If you don't have the proper submission of documents or prove that the reason why you are claiming certain expense or reasoning behind what you're doing, they'll disallow and make you pay back taxes. So that's why hiring a tax strategist really protect you from that. um, First of all, you're gonna have a real person, to talk to who does this every day. That you can ask, hey, is this a good thing to try? Is this a good thing to do? And what kind of paperwork I need to prove this? Or you talk to somebody and they'll tell you maybe it's not a good idea. Another one is missed retirement strategies, and this is so first one is not maximizing retirement contributions. Um, so basically, those are contributions being based on their salary, on your salary, and this involves doing reasonable compensation study to find the right balance between paying as little payroll tax as possible while maximizing entity contributions. Um, and not utilizing employer contributions and not contributing at all. So basically, this is when it comes to an S corp. Um, a lot of times, again, people don't know that they think that you are supposed to pay yourself a set salary, and the salary is the only thing. Like if you pay yourself $4,000, you have to pay for 1,000 period. You cannot go up or down, which again, the salary is always debatable. And 1 month, it's really different. So 1 month, it really depends on the work that you are doing, and it really depends on a lot of different factors. So sometimes, people say, well, how much am I supposed to pay myself? So that's a really big one. And then it's like I tell my clients, we do a study and we want to make sure that um, you gotta do what makes sense for you. And then another one is missed deductions. The common one, asset deductions is a lot of times. A lot of times people are scared of assets and depreciation, so they end up not claiming those assets at all. And for example, big one is vehicle. They bought a vehicle, but somebody told them not to claim it because they have to pay it back once they sell it. And this is a big, big, big one because you really have to look at your situation. And for one, it might not make sense, but for you, it might make sense. So sometimes, yes, you once you sell it, you pay back, but the benefit might totally worth it. If you are saving a lot in taxes and you're able to use that money to make more money, and then next year, in 5 years, you might not even have to worry about paying back depreciation because you'll buy another vehicle to depreciate. And then this one is missed real estate investment. So basically, not leveraging real estate losses towards other income or not using tax savings to invest into real estate. So this is a big, big one. I mean, this one is the real estate. You have to understand is um, once you grow the business, once you are making um, your idea is okay, I want to grow, I want to make money, where should I invest? Real estate should be the number one opportunity that you should look into. But a lot of people, what they miss is um, they have real estate, but they don't do cost segregation. So they have all of that money sitting in there that they could, and they end up paying so much in taxes where they could have do the cost segregation study, depreciate their property, save money on taxes, use that money, invest into real estate and do a cycle. The more you can use, the more money you can use today, um, the better it is because also, the dollar devalues. So if you think, well, I'll rather pay um, my taxes today and think of something tomorrow, well, today's dollar, it's not going to work the same as it is tomorrow. So sometimes while you're doing that, you're really hurting yourself. And the way we look at it, the more you're able to keep today, the more you're able to grow, the more you have tomorrow to reinvest and to grow more. Um, those that keep spending, those that keep draining their accounts, those are the ones that end up in the hole, and those are the ones that have the hardest time leveraging their business and investing and growing. Um, so from this, we want to help you avoid missed opportunities and stop overpaying in taxes. And basically, how do we do this? Is number one, first strategy is we move you from a Schedule C filer to an S corp. And as I mentioned earlier, there's a lot of people that are still filing as Schedule C, which when you started, that's okay. But as you grow, your entity, your business has to grow with it as well. And this first strategy that we use, we look at the entity and we look, okay, where are you? What's your growth? How does things look? And then if it makes sense to move you to an S corp. And 99% of times, it makes sense to move people to an S corp because they see huge, huge tax savings. And what is an S corp? S corp basically is a form of an LLC that has tax benefits and gives your business more credibility. Its main benefit basically is to help you save money on taxes, and you still pay taxes on federal, but basically it eliminates self-employment taxes. And some potential savings that basically this is some good example. Um, it really depends case by case, but we see people save $25,000 a year just by switching to S corp alone. And then strategy number two would be setting up an accountable plan. An accountable plan is it's an agreement that you make with your business, and basically you ask your business to reimburse you for the expenses you make on behalf of the business. And how does that benefit you? It's basically it's reimbursements made under. So basically expenses that you pay out of your pocket, that is business expenses, you cannot claim them because all the expenses have to go out of your business bank account unless your business reimburses you for them. An accountable plan goal is basically to do that. um, and then our third strategy that we use is leveraging retirement accounts. So basically, what that does is you invest in something like a solo 401k, and use that to lower your taxable income, then basically leads to less tax payments. And here's an example. So $100,000 currentable taxable income, 5,000 is investment into a retirement account. So $95,000 is your new taxable income. Um, and then other accounts you can set up to help with tax savings are simple IRA. And so our strategy number four is cost segregation. And cost segregation is basically this is where you buy properties or the properties that you have. It basically can help you lower your taxes. Um, this is where we do a cost segregation, and instead of doing a 27 years, it basically does accelerated depreciation over certain things. And I've did a this year we did a cost segregation to a lady that had six properties, which actually every year she would pay over $60,000 in taxes. And this year, she reached out to me and she was like, I've been paying so much in taxes. What can I do? So we tried doing cost segregation, and this year she's first time she's actually getting $20,000 back. So basically, yeah. So doing that could help, especially if you are a W-2 earner. You are paying all of those taxes. So cost segregation, basically what it's going to do, it's going to take away some of the income that you received, which means you're going to overpay taxes and get some of those taxes back. Uh, the fifth strategy that we use is a master's rule. It's a rule created so that owners can rent out their homes, their business up to 14 days without having to report income on their taxes. We also, there's another name for it, Augusta rule. And basically, the way that you can use it is um, you check average daily rents in your area. So basically, you kind of do a Airbnb, do some research, and look if I was to Airbnb a property like mine, um, how much am I able to rent out? So and then basically this and then you document everything and you say, today I'm renting my house for this amount of money. You want to make sure you have an agenda. So, and then you document everything and you're able to write it off. So the biggest purpose of it is you do like a big popular one is 4th of July barbecue party. People invite over their guests over to their house. They have a good time. They talk about business, um, and then it's you can um, basically write it off and make sure that you pay from your business and have a contract. Strategy number 6 is you hiring your kids, and this one is a way business owners can hire their kids and lower their tax liability. And the way you can use it is basically number one, keep records. Number two, give your kids a job description and assign them reasonable pay. Number three, deduct it from the business. And number four, pay less in taxes. Those that have kids use this strategy. This is a great way to teach your kids about money, about taxes, and get some great benefits from not paying some of those taxes. Strategy number 7 would be Section 179 deduction. And this one sometimes also called capital expenses. In some cases, you can write off the entire expense to lower your income tax, to lower your income and pay less in taxes overall. And this code basically there's legal tax deduction that says that you can deduct 60 to 100% of your equipment that year. For example, if you owe 100,000 in taxes, but you need a new vehicle or need to upgrade some of your office equipment, um, so basically, if you owe $100,000 in taxes, uh, but instead of paying $100,000 in taxes, you can go and get yourself a new vehicle, upgrade your office equipment, and lower that liability down. Um, how basically, and the way we look at it, um, how good are you making yourself of writing an IRS, $100,000 check? This is kind of throwing money down the drain. If you go out, buy yourself a new vehicle or office equipment, you are doing yourself in the business a favor. And this is where a win-win scenario. So let's go over the summary what we covered. So basically here, things that you can do to save money in taxes. So number one, moving away from LLC to an S corp, setting up an accountable plan. You can leverage retirement accounts. You can investigate in real estate. You can do a master rule. You can hire your kids. You can do an equipment detection. Then what's next? Implement the strategies to maximize your tax savings. Review this training again to ensure you're getting all the strategies you can for your tax liability. Or schedule time to sit down with myself or someone from my team to talk about your tax challenges. And basically, the way to get a hold of me is you would Um, there should be a link below that you to my calendar, or here it is on your screen. This is how you can get schedule a call with me. And let's go through some frequent questions um, that people have. So not first one, can this work for me specifically? So it really depends on everybody's unique financial situation, business structure, and income level. I'll be really glad and take a look at your situation. Schedule a call, and we can definitely get you in and see if you're a good fit. Another one that most common one that people ask me: do I file taxes? Yes, I file taxes. In addition, I offer personal tax strategies to help reduce your liability, maximize deduction, and ensure compliance with current tax laws. And how much does it cost? So the fee really depends. It ranges from anywhere from 2,000 all the way to 25,000. Um, but basically, we don't offer any programs unless we're 100% positive we can help you. We have a motto in my company: if we can help you save time or make time, or save money or make money. So we don't deserve yours. So basically, um, the fee, at time when if you're not comfortable in investing in yourself, this is a really scary one. And I tell everybody, we do have a guarantee. If we don't save you your money back, um, but we don't even get to work with. I don't even take you on the client. If I see that there's nothing really I can do, it's kind of like, what's the point? I want to work only with those I can help. And if I see that, you know, you are interested in doing something like this, but you're not paying enough in taxes to cover the fees, then it'd be best for you um, to wait. And what if this doesn't work for you? So this particular strategy isn't right fit. We'll explore, more options. There's all over 100 plus different strategies out there. My goal really is to find an approach that aligns with your financial situation and long-term goals. So if something doesn't work, we adapt, make adjustments until we get the best outcome for you. And what if I have partners? Well, having partners can affect how we structure the tax strategy. We need certain documents, credits, entity choices, and it can depend, on the number of partners, the roles, and how income is distributed. It's best to review the partnership agreement, ownership percentage, and individual financial goals so we can tailor a plan that works best for everybody. And what if you owe back taxes? So basically, the first step would be to adjust them directly. It depends on the situation. We can explore options like setting up payroll plan with the IRS, applying for an offering compromise, or requesting a penalty abatement. So once your back taxes are under control, we'll focus on proactive strategies and maximize your future tax burden and keep you on track and moving forward. So if you're still are thinking and something that can hold you back, so here are some reasons that you can have if reason number one, you don't actually need tax help, just looking around. If you're afraid of making the wrong decision, or um, basically if you have unanswered questions, reach out. Schedule an appointment. We can help you get all those answers. And basically, yeah, schedule a free call, get on a call, and we can definitely talk about your situation and see if we're a good fit to move forward and see if we can help you save. And I hope to see you in the next end.